Bitcoin dropped below $100,000. The fear and greed index is flashing fear, and over $1 billion in leveraged positions were wiped out in a single weekend. Yet, just as the bears were sharpening their claws, the price ripped back above $105,000. What on earth is going on? Is this just a dead cat bounce before a much deeper crash? Or was this the final, brutal shakeout before the next explosive leg up to new all-time highs? Well, today we're going to dissect the anatomy of Bitcoin's perplexing price action. We'll break down exactly what happened last week, why the market panicked, and how it was able to recover. We'll then analyze the single biggest catalyst on the horizon, the end of the US government shutdown and the multi-$100 billion liquidity bomb it's about to unleash on the markets. And finally, we'll look at the key levels, the powerful catalysts, and the dangerous headwinds that could decide Bitcoin's fate for the rest of 2025. My name is Nick, and you're watching The Coin Bureau. First things first though, a little bit of housekeeping. Nothing in this video is financial advice. It's just educational content intended to inform you about the forces shaping the crypto market. And if that sounds good to you, then show your support by smashing that like button and subscribing to the channel if you haven't already. Okay, let's start with the anatomy of the dip. After hitting a new all-time high of over $126,000 in early October, Bitcoin began a steady bleed downwards, and this culminated over the first weekend of November when the price finally broke the critical $100,000 psychological support level, plummeting to a low of just under $97,000. And this was the first time Bitcoin had traded below six figures in over 4 months, and it triggered panic across the market. In total, over $1.7 billion in leveraged long positions were liquidated, wiping out traders who had bet on a quick recovery. So, what caused this brutal sell-off? Well, it was a perfect storm of 3 factors. First, there was the broader risk-off sentiment in traditional markets, driven by concerns that the AI stock boom was getting overheated. And since many of the same investors trade both tech stocks and crypto, when one gets sick, the other often catches a cold. Second, on-chain data showed that long-term holders were selling. In October alone, they offloaded over 100,000 Bitcoin. And this is a critical point, and we'll return to it a bit later. But this steady sell-in pressure created a formidable headwind. And third, there was simple retail exhaustion. After months of choppy price action, many smaller investors were in, as one analyst put it, max desperation mode. But just as things were looking their bleakest, a floor was found around the $98,000 to $99,000 level, and the price stabilized and began a steady climb back, reclaiming $105,000 by the 11th of November. So, what stopped the bleeding? Well, while retail was panicking, bigger players were buying. After 6 straight days of outflows, the US spot Bitcoin ETFs saw a sudden reversal, with a massive $240 million inflow on the 6th of November. And this signaled that institutional demand was stepping in to absorb the selling. At the same time, on-chain data shows that crypto whales accumulated an estimated 68,000 Bitcoin during that 1-week dip. And this is a classic pattern, guys. Retail sells in fear, while smart money accumulates at a discount. The market flushed out the excess leverage, found a strong base of institutional buyers, and began its recovery. However, the technical recovery is only half the story. The single biggest reason for the renewed optimism isn't found on a blockchain explorer. It's found in Washington, D.C. For 42 days, the United States government has been in a partial shutdown, creating massive uncertainty for the economy. But over the last 4 days, a breakthrough has finally occurred. Late on Monday night, the Senate passed a bill to fund the government, and the House is expected to vote on this bill and pass it as early as this Wednesday. Now, this is very bullish for one very, very important reason: liquidity. To understand this, you need to know about something called the Treasury General Account, or the TGA. Think of the TGA as the government's main checking account at the Federal Reserve. During the shutdown, as tax revenues continued to come in, but the government spending slowed to a crawl, the balance in this account swelled to a staggering $1 trillion. And this effectively acted like a giant vacuum, sucking approximately $700 billion of liquidity out of the financial system. Less liquidity means less capital available for risk assets, and this drain was a major factor weighing down both stocks and crypto over the last month. But now that process is about to go into reverse. When the government reopens its doors, it will start spending that money. The TGA balance will be drawn down, injecting hundreds of billions of dollars, up to $850 billion, back into the market. And this massive liquidity snapback is a powerful tailwind for all risk assets. It's like turning on a fire hose of capital right as we head into the end of the year, a period that is historically very strong for Bitcoin. Now, navigating these kinds of major macro shifts requires access to reliable exchanges and the right tools. And if you're looking for the best platforms to trade on, then you have to check out the Coin Bureau deals page. That's where you'll find sign-up bonuses of up to $100,000, trading fee discounts of up to 50%, and deposit cashbacks of up to 75% on the best crypto exchanges around. To get these goodies, all you need to do is hit the link in the description or scan this QR code. Once you get on the deals page, find a deal that suits you and click one of the Sign Up Now buttons. But remember though, these deals won't be around forever, so take advantage of them ASAP while you still can. Okay, so we have a technical recovery from oversold levels and a massive liquidity catalyst about to be unleashed. So, where does the market think Bitcoin could be heading in the next 2 months? Well, the sentiment among major analysts is decidedly bullish. Strategy's Michael Saylor is sticking with his $150,000 target. The CIO of Bitwise, Matt Hogan, believes we could easily see new all-time highs, meaning north of $125,000 to $130,000. And analysts at JP Morgan have a year-end target of $165,000, assuming the market can, of course, reclaim key levels. But to get there, Bitcoin has to navigate a battlefield of support and resistance. And let's break down the key levels you absolutely need to be watching. First, support. The most important level is, without a doubt, $100,000. And this is now the psychological and technical floor. The market has shown it will aggressively defend this level, but a sustained break and close below it would be extremely bearish and would open the door to a much deeper correction. Below that, the next major support zones are around $95,000, which is where medium-term holders have their cost basis. And the ultimate line in the sand at $88,500 is where the active investor realized price sits. And now for resistance. The first major hurdle is the $110,000 to $112,500 zone, and this area is critical. Why? Well, because according to Glassnode, $112,500 is the average price that short-term holders bought their Bitcoin at. And right now, all of those holders are underwater. For the bull trend to truly resume, the price needs to reclaim this level and turn it back into a support. If it can do that, the path is open to retest the previous all-time high of around $126,000. But of course, it's not all clear skies and floods of liquidity. Bitcoin is still climbing a formidable wall of worry, and there are other catalysts and risks to consider. On the bullish side, we have the Federal Reserve. Now, there is currently a 68% probability of another interest rate cut at their 10th of December meeting, which would be another positive for risk assets. Furthermore, with the government reopening, the SEC can get back to work clearing its backlog of crypto ETF applications. A wave of altcoin ETF approvals could generate a fresh surge of positive sentiment across the entire market. However, there are also very real risks that could drive prices lower. And the biggest one is that on-chain signal we mentioned earlier in the video. Long-term holders are selling. Since July, the supply held by this cohort has dropped by 300,000 Bitcoin. And unlike earlier in the cycle where they sold into massive price rallies to take profits, this time they are selling into weakness and sideways price action. And this signals fatigue and a potential lack of conviction among some of the market's most seasoned investors. It is the single most concerning bearish data point right now. Other risks, meanwhile, include the possibility of ETF outflows returning, a hawkish surprise from the Fed if they decide not to cut rates in December, and the seasonal pressure of tax loss harvesting towards the end of the year. So, where does this leave us? Well, the truth is, Bitcoin is at a critical crossroads. On the one hand, you have a market that just survived a brutal technical test, backed by a powerful, once-in-a-cycle liquidity injection from the US Treasury. And this is a profoundly bullish setup that could realistically propel the price back towards the all-time high by year-end. On the other hand, you have concerning signs of fatigue from long-term holders, suggesting the underlying market structure isn't as strong as it was a few months ago. The persistent selling from these early adopters could absorb much of the new liquidity and keep the price range-bound. So, is the dream of a bullish end to 2025 dead? Absolutely not. But it's no longer a simple game of hype and narrative. The resolution of the government shutdown provides the fuel, but the market engine is showing some signs of wear. The battle for the next 2 months will be fought between this flood of new liquidity and the stubborn wall of overhead supply. The first test will be reclaiming that critical $110,000 to $112,500 zone. If the bulls can climb that hill, the path to new all-time highs is clear. If they fail, we could be in for a longer, more frustrating period of consolidation. So, buckle up. And if you want to understand more about how the US government accidentally became one of the world's biggest Bitcoin whales, well, you can check out our deep dive on that right over here. And if you haven't managed to subscribe to the channel yet, why not? You can do so right now over here. Thank you very much for watching, and I'll see you guys again very soon. This is Nick, signing off.